Check, mic check. All right. We got some dropped frames here. Let me make sure I'm running appropriate power for me to stream appropriately. Yep, we're good to go. All right, let's get rolling. Good afternoon. Actually, good evening, everyone. Hey, what's going on, Kirk? Good to see you, brother. Hope you're having a good time. Here's Friday, end of week, so lots of good stuff, lots of good, interesting stuff that I have seen this week, learned a lot, and improved a lot as well. So, Kirk, you're funded. Hell yeah, brother. That's killer. They made a new rule, and we'll talk about that in a moment, but they made a new rule for from now until the 27th or 26th where you can pass in one day. Now, that's going to lead to a lot of over leveraging, but that can lead to a lot of really good stuff too. So let's take a look at the charts, but congratulations, Kurt. It's very exciting to see. And I hope you do the same thing for your performance account and slowly get to your funding level. So keep it up and keep on rolling. So we're taking a look today at the yeah, you saw it. Yeah, it's a good move. I think it's going to lead to a lot of revenue for the company itself, since there's going to be a lot of people that blow their accounts, but so as is life. So Friday, we've got some items at 8:30 a.m., 9:15, 9:45. We have a little bit in the morning. That's going to lead to some volatility here. And we're going to see if we can reach up higher for Friday. Looking at the charts, let me bring over the main chart here, and we will take a look at this week. So far, on this week, we can kind of see how, and let me blow this up a little bit so that we can see multiple things. So we can kind of see how this week we have a combination of things. Let me clear some of the chart. Actually, we can leave that for now. So we kind of see how we've risen up into this area here, and we blew past the daily level, aiming and reaching for that week level. We did see that there's a weekly bearish order block here and imbalance up here. So I think that there's some buy side liquidity awaiting above where we marked today, and I think that we can aim for that 16,940.5.50 level. If not today or tomorrow, then we can retrace and then head for it the next week. That's fine, but that is still our main draw on liquidity. So taking a look at the daily, we'll do the same thing here. Same thing these past couple of days. We can kind of see how the daily wick we've seen. Let me blow this up a little bit further. So this particular week, you see we had a very small tail down, and then we've got Monday, Tuesday, Wednesday, Thursday, and that might be the high of the week. We've left a lot of fair value gaps to the upside. So there's a lot of room for us to head back down. And so where could we head down to? Well, here's a low, high, lower, low, higher, high. We could potentially head down to here. This could be a bullish breaker. And then we could head down to this imbalance as well. Insert name here. Hello, hello. Hope you're doing well, brother. Good to see you. So currently on Friday, we now have a range here where we want to look at yesterday's high and low, the day before's high and low, and the prior day's high and low. Now, yes, it can head all the way back down here. That would actually lend some value to this weekly bearish order block if we were to do that. So that's something we're keeping in mind for tomorrow, that we could head lower first and treat this as a bearish order block. But we are so close to that weekly imbalance that my initial take is that we have not seen a true We haven't seen a true movement lower yet. So we're still seeing higher highs, higher lows, higher highs, higher lows. So if we go down to the 4-hour chart, we can see that today we had this marked out in the morning, and we knew that there's a 4-hour fair value gap. We came down, collapsed through all of it, came into this bullish order block here. As we mentioned on live, on the chart, you can't miss it here. Sell side has only been taken so far in the morning. Watch for it to return to equilibrium or discount for buy continuation, and I marked that out many times on the hourly. So on the 4-hour chart, this supports our claim that we are continuing to see price being supported at key levels. So my stance is that we're going to head up into this weekly premium SIBI low, possibly this monthly bearish order block. So that's it on the 4-hour chart. So we'll get into today's price action on the hourly and talk about that a little bit. So you can see yesterday's price action here ended there in Asia, or had Asia begin, and now we had today's price action, right? So what happened today? Well, when we opened up, we ended up heading higher first and kind of like staying in this Asian range. London dipped down beneath that range and started to reject, creating lower highs, creating a relative equal high here. So at 9:30, we have a Judas swing up top. 10 o'clock, we take out the 12 a.m. opening, as well as we get close to taking out this short-term high. We don't quite take it out and then head lower. Whenever we see signatures like that, we have liquidity areas to retrace to. There's a high likelihood that we do that. Despite that there was areas that we bought up, there's definitely areas that we can kind of see clearly on the chart that we traded to and through this buy side imbalance. Now we traded back up to the top of it and ferociously dropped in the afternoon, treating it as an inversion fair value gap, which we should because it is in premium. I taught this to the folks who are on live today, where a really key subtlety that's going to let you do much better with the inversion fair value gaps is if you look for them in premium or discount, depending on which one they should be. It should be the opposite. So a SIBI should be in a discount, a BISI should be in a premium, where you're looking for the inversion fair value gaps there. So price continues to slow down, head all the way down to this hourly gap, the consequent encroachment. It touches down there and immediately pops back up. And so we took a nice scalp at the end of the day macro to finish off the day. And now price is in a little bit of a consolidation here. So we need to wait and see what happens during London and the rest of Asia session as well. Let's head down to a 15-minute. Again, nothing too crazy here, but one thing you can see is that you had relative equal highs here at the open. We went up, took out 12 a.m., almost got to this high and then failed. And then we see this continuation where we head down to the opening range gap. Then we headed back up to it, balanced that opening range gap completely out. And now we dropped below it. We headed up one more time and immediately dropped at that 1 o'clock movement. So on the 15-minute, same deal. Sell side kept getting taken. Sell side kept getting taken. And we didn't really see much until we got to this major discount buy side imbalance, right? And we took out a large chunk of it too and saw immediate movement upwards. So what does that look like on a 5-minute chart? Well, I've got it here. So on a 5-minute chart, we see the exact same signatures. With the exception of this short-term low, we saw short-term lows be taken and taken and taken and taken and then taken all the way down into this discount PD array, right? So I was harping on that in the afternoon. And if we were going to see our price retrace to a certain level, it would be this discount PD array. And this is also this discount that I had mentioned during the daily draw on liquidity. From there, we kind of just rose up the rest of the afternoon, and now in Asia, we are creating a range. So we're going to watch that Asia range closely. Let's go down to the 1 minute chart. Let's see if there's anything that we could have seen on the 1 minute chart. You can kind of see some of my executions there. But the real key was the drop after this 3 drives pattern in the morning. So there's 1, 2, 3 drives into a key level right there, which is a previous short-term high. We immediately dropped from there, and we saw institutional order flow entry drill right here, as we took out a lot of stuff here. So that wouldn't have necessarily been a entry right there though, because it would have not have beaten through a short-term low here. But we do see this displacement at 10 o'clock, and we see this retracement to this bearish order block. It is respected, and we end up heading lower for a large majority of the rest of that morning session, with the exception of us heading up here all the way up until 1250, 1249 or 1250 specifically, where we see the 1250 to 110 macro absolutely crush it lower. And we knew this was happening because we expected this price to be a balanced range. If it was going to head higher, it was going to head higher and then bounce off of that, but instead it bounced off the top and completely started spooling. Did not give any way of entry here. It gave 0 entries. So if you weren't short already, that would have been the time to look. Now, if you had scalped this, then you knew that there was going to be room for you to take this lower all the way to this discount buy side imbalance here. On the 1 minute, did you have very many entries here when it came down here? Well, you didn't really have quite nearly as many entries here. You can kind of see that you had this bullish order block, fair value gap. The only entry that you could have possibly gotten on is if you had entered a limit order at this fair value gap's high, which is 16673.25. What does this price get down to exactly? A low of 16673.25. So your limit orders might or might not have gotten hit depending on how many orders were happening at this time. So this would be the prime entry, 16673.25, 73 up to 83, 93, 03, 13, 23, 33, 43. That's a solid like 60 handles before it started consolidating, right? And it consolidated up into the end of the day. We saw that at, where is this? We saw that at about 3 till, there was a nice little peak up into that liquidity, liquidity void. And we took our profits there on I think it was, which one was it? Was it 42? It might have been this one here, actually. So we took our profits a little bit early, but the price did end up getting up to that liquidity void, which we had marked before as a balanced price range. So we if you think about it, we have not created any lower lows, and in fact, we are still on our way to create higher highs. We do have a sell side imbalance here on the 4-hour chart, but I think that these relative equal highs up here will serve as potential liquidity. And I'm going to remove these lines. I'm going to move this one further down because we'll need that for the middle. We'll touch on that in a moment, but we do have these relative equal highs here now. We can probably get rid of some of these lines because they're no longer relevant. If we head up there, it's going to be for that relative equal high. Okay, so we're going to get rid of some of these lines now. And yeah, I think that's it. Once this 4-hour volume imbalance gets traded up to and through, then we can take this volume imbalance off as well. So now we know that in Asia, we've started to head higher. And in London, I mean, if you take a look at what happened these past few sessions in Asia and London, let's get on to a 5-minute for us to portray that a little bit better. So Asia session today, we headed lower and then consolidated before Judah swing up to head lower, right? But the previous day, Asia, London consolidation, morning 1, 2, 3, 4 before it headed lower to take out buy stops, ultimately to take further action to the high upside on economic news. So that's what happened today, and this narrative then begins to draw something that says, hey, we for the most part have seen that Asia consolidated with London, London consolidated with Asia, Asia consolidated with London, right? London consolidated with Asia. So up here, why would anything be different, right? So I think that one Thursday retracement does not mean that Friday can't hit an all-time high. However, we are cognizant that it has retraced. We started to see some of the lower time frame shifts in market structure, but on the higher time frame, we still haven't seen it yet. So, let me think, daily, weekly. Okay, so that's all we're looking at for today. For tomorrow, weekly premium Sibi low is one key. The weekly bearish order block as well is another. So we're going to keep an eye on these two areas here. Yeah, I think that's about it though. I'm not sure who else is on right this moment, but if you haven't heard, Apex is indeed running their sale, but they're allowing you to pass evaluations in 1 day before the end of the year on December 27th. So they're testing these things around where if you pass it in a day, then or 2 days or 3 days, you're automatically chosen to have a performance account created for you. So that's really one of the biggest pieces of news for Apex that they're testing out right now. I have a feeling they're going to get a lot of people, lots of emails. And I don't know what that's going to look like, but I will attempt for a few more performance accounts to replenish, the ones that I blew based off of poor trade copying. And we'll continue to build one by one at a time until we build a buffer on those accounts, and then we will trade trade copy. Once we get to above, I might have a goal of getting 2,500 above the 2,500 trailing stop. Once we get to about $50,100, I want to try to get $5,000 above that before I start trade copying again. Mostly because that helps me reduce risk and maintain good risk parameters, and that's a really nice buffer that I'll have at that point in time. So on all accounts. So we'll build them up one by one, and then we will continue to parlay them, basically. Let me think. Is there anything else that I am missing? Where is that? Apex, there it is. Okay, so I think that is it for tonight. I don't have anything else for you. Insert name here. Yo, they are going to get a ton of resets. I'm sitting on a few PA accounts. Awesome. I'm setting a goal of 10K before any payouts. 300 or so a day. Small gains over time. That's awesome. That's awesome. That's really great that you're disciplined there. You're trading very disciplined. You're not like me. You know, you are very. I'm really happy that you're disciplined. and I think that that's going to lead to very, very good control today. So keep me posted with how you do. It'll come in no time though. Your first payout's really fun. Honestly, your first payout is gonna pay for like 2 or 3 more performance accounts. Like, it's very, very simple for that. So, yeah, a little bit at a time. I'm going with 2% risk, but if you're comfortable with higher risk, then by all means go ahead. The way I see it though is on a $2,500 drawdown, if I am willing to risk 1-to-1 on, let's say, 12.5 handles of NASDAQ, this already is 1%, right? $25 is already 1%. So if you are 10 times that, 250, right? What does that put us at? That's 10% of your account. So as long as you're making 1 to 3 like trades, that's great. But I think that this only gives you 10 bullets in the clip, right? So I prefer having a lot more bullets on the clip, even though the growth might be slightly slower in the beginning. There should be no need for me to parlay higher. Getting 40, 60, some dollars a day, that's good enough for me while I rebuild some of my performance accounts that I blew. So I'm still learning. I'm not perfect. There's going to be traders in this room that are like 10 times better than me. Definitely never said I was the best trader, but I understand the concepts quite well, and I can distill them. That's where my superpower is here. And I'll continue to add value to this channel as best I can. And I'll continue to mastermind with folks here on Inner Circle Trader Concepts while he's gone, while Michael's gone doing his Robbins Cup. That'd be really fun to do one day, by the way. I would love to understand the concepts deeply enough to do Robbins Cup. 1 to 2 minis for 8 to 15 points. Yeah, I think anywhere from 5 to 10 points is pretty simple to find if you're trading properly in ES. And then NASDAQ just does tend to run a little bit faster, but those numbers can get kind of scary pretty quickly. Nothing's as fast as oil on some days. Gold can be pretty fast too, but I don't trade gold. I have a lot of friends that do trade gold, and they're awesome. I don't know how they do it. Gold is so volatile. It is so incredibly volatile, and yeah, maybe I'll trade it someday, but I stay away from gold typically. Commodities, I definitely want to trade at some point too. Seasonality to them, and that will be really fun to study over the course of time once I get a little more mastery over the indices themselves. Okay, so let's take a quick look at our Asia range that's forming right this moment. Okay, so we've got a range here, roughly. We've got a range up here. Nothing really much that we can consider, but we want to see something like, let me see if I can get this actually to fit. Stupid thing. So we want to see stuff like this. So we have our Asia range. The midpoint we also want to mark out. For now, we know that this is dynamic. Price could go above this range, but for the time being, we have Asia's range. I wish I could actually read this. 16759.50, we'll call it. There we go. And we're going to keep that. Let's move this over to here. Let me make sure this number is accurate. And we can remove this fib now. Okay, so now we've got our Asia range. We can see it on the higher time frames. We can see that midpoint here as well. We can draw this out to 5 o'clock p.m. on the next day. Same with this. We can draw this out to 5 o'clock p.m. the next day. So we have Asia's range defined up here. We don't know what midnight's opening price is going to be. You have to lock it in and be done. I did 15K on oil a while back before the bell. Scary. Oh, awesome. That was on a performance account, insert name here? Or were you trading your own account, or were you trading one of the like Apex, like, you know, performance accounts, or was that like on a evaluation account or something? That's pretty cool. Yeah, oil is scary. It is it is very, very, very scary. It can be your best friend, or it can really go against you super quick. But I love it. I trade that on my main account. Oh, Top Step. Awesome. Yeah, Top Step's actually pretty good. They let you withdraw pretty quickly. I've heard that Apex is working on letting you withdraw after 7 days. I think they're working on some things in the background. So that's going to be really, really great. If they can do that, Apex will easily have one of the best, most simple yet rewarding for traders who know how to trade system to allow traders to use prop firms and become funded. So Top Step's pretty good, but they can't compare. Sometimes their sales can compare, but it's really hard to compare to Apex's like 80-90% off sales. It's really hard to compare to that. And it honestly, for the lifetime fee, it's very cheap compared to most firms. And Apex has been around for quite some time too. So Top Step, lots of people have enjoyed it. They use Tradeovate with the Trading View, and it's easy to use. I've grown accustomed to Rhythmic. I really like Rhythmic. I like how simple the charts are. Yeah, it might look a little archaic to most versus like Trading View, but I mean, I love it. I love having my stuff here, and all my charts together. There's a few things I would like better, but I think this is sufficient for what we need. So yeah, today's price action, as you can see, everything we called out has happened. We treated all that as a version fair value gap. I'm not going to rehash all that, but I will remove these for the time being because now these are balanced price ranges. I don't care about them. I will have other things to refer to. This now becomes a range here, and this can be referred to all the way to 5 o'clock the next day. This is the outstanding range on the 5-minute here. Let me see if this should be the same on the 60-minute as well. Yeah, so I'm leaving this area of liquidity here with the knowledge that there are some sell side liquidity areas down here. One thing I want to note now as well is the fact that we have a rejection block here now, right? So we have a rejection block here. The close 16667.75, 16666.50. We'll use the higher of the two. 16666.75. And that will be our rejection block now. One hour. Bullish rejection block, I guess we could call it. So we're going to keep that there. We have the SIBI high that we referred to. So we dipped back down into that daily sell side imbalance, buy side inefficiency, right? So this is a SIBI. It's a SIBI in a premium that we bounced off of here. So can we refer back to it? Yeah, absolutely. If we go back to the daily chart, for example, so it's this sell side imbalance that we see up here, right? That's the one that we're referring to right now. This one over here. That's on the daily chart. So we had sell side delivery. Now we have buy side delivery as well. And we saw that we came down into it and then headed higher. So I do not think that we will refer to this like drastically anymore. Maybe if we continue, we might refer to this after the end of this week. But I'm not holding my breath. I don't know why these keep moving here, but let's make sure those go to the end of the week. So on the daily, as you can tell, we treated this as an inversion fair value gap because it's just there and bounced up higher. So we should be able to see that on our lower time frame chart still, where we have it right here. We will move the markers out a little bit. Ultimately, we're going to be looking at this as a, let's go to the hourly chart. We're going to be looking at this as a rejection block. We will still hold. Let me see. So we'll use the top of Asia here as 16885.50. And we'll roll this out over time to the end of the week. So this is still a potential area of liquidity here that we can mark out. We'll call this minus 1 day high, buy side liquidity. So we'll have that key level there. This key level we could refer to potentially as well. The high there being 16877, about 10 points less. If we go towards this area, we're likely gonna take out these highs and head towards that premium SIBI low as well. I would love to see where New York Open is, midnight open, because I have a feeling that we're gonna try for that. Let's see. Oh, whoops, missed a comment. Apex is king right now. Yeah, they're doing a really good job, and they're not letting like the gamblers and the tools across the world who are just trying to like milk these firms mess with them. They're set up so well, so nicely. So yeah, I think we didn't see a lower low yet. Until we see a break below market structure, then we're still on the higher time frames. We are still bullish, and we think that we could reach the midpoint of this premium SIBI high, or premium sell side imbalance on the weekly. So let's see what London does. Let's see if we get another one of these like kind of like whatever type consolidations during London. If we see a movement up though in London, I would need to see a break above this buy side liquidity. I mean, we'll try to get in earlier. Today I was very late on the draw today, so I missed out on some of the some of this morning move in London or in New York Open. There wasn't really much here as consolidation, immediate like stop taking, and then some more movement to the upside. So we saw this occurring at the time. We knew that there were relative equal highs up here, and buy stops got taken, buy stops got taken, buy stops got taken a third time, and that's when we were taking longs all up into that and exiting as well. But yeah, I mean, I think that tomorrow, if we can see something like where we consolidate here in Asia, and then we maybe dip down, take out some of this area of liquidity there. I can remove this now. And we'll move this once we figure out what midnight occurs during midnight. Yeah, I mean, I don't need to necessarily put all of these out there. There's plenty of little fair value gaps that are there, so I can always come back and mark some of these. But these short-term lows, all of these are going to be areas that we'll refer to at some point. There's a daily 12.8 down wick. Where is that? This one here. So there's a few more of those available as well. So I'm going to remove them for the time being because all they're doing is they're distracting. They're too far down. There's no reason for you to be paying attention to those. And we're just going to keep what we know on the charts, what we possibly could see on the charts. And yeah, we'll see if we end up making a lower low here and respecting. Let's see if we respect. Let's see if I can find this here. On the 4-hour chart, let's see if we respect this movement to the upside. There's still certainly much more room to go, but we could see one of these things where we just plateau, right? And consolidate a little bit. Let's see if I could find an example. So you can kind of see how there's consolidation, target, consolidation, and then we've broken out above it. Well, what I'm curious about is if we do, there's not really, I mean, yes, we still have some movement above us. We have this consolidation remaining. And we've only barely breached ourselves into this area. I have a feeling that we're going to head towards this and then some. Why? Well, let's take a look. So we have this consolidation on the weekly level, and we've only just now pipped into this. If we are going to see the rest of December rally, we are likely going to see all-time highs before we see a recession next year or a downside. I will, if we make it to this monthly intermediate term high, I will sell out of the majority of my stocks and wait for a session to continue higher and leave things in money market until things get a little bit better. I mean, I might leave like a small portion if in the off chance certain stocks go to the moon and, you know, economy's better, everyone's fine, jobs aren't being lost to AI and stuff like that. You know, if everything's like good, fine, no big deal. I have money in real estate too that's earning good, solid returns. And so I have a lot of hedges around, but for those that aren't, I mean, you're hitting, if you get to this all-time high, it could rocket quite a bit, but it doesn't stay there very long, right? It's not going to stay there forever. I mean, I don't have data past this time. Unfortunately, they don't give me that much data. But yeah, I mean, on the monthly level, getting to this all-time high would be the next area of liquidity that we have, right? We have this bearish order block here, yes. On this monthly, we've ripped through these. Typically in the month of December, we do see bullish tendencies, so there's still 2 weeks left. I would venture to say that we have room to head up there with some of the economic events that are happening. So let's take a look at ES and NASDAQ and YM. So you can kind of see everything's moving in concert on the higher time frames. Higher lows are being made. Higher lows are being made everywhere on the higher time frame chart. Let's see if there is. I don't think there's really much else on the lower time frame charts, but at least on the higher time frame charts, we can see that there's nothing showing an SMT divergence yet. So if we see one, it's likely going to be on a lower time frame chart, but it's not going to happen soon, I don't think. Let's see. While we wait for that one, Treasury yields continue to head lower briefly. Looks like they rose today. But they're all working in roughly the same direction. T-note bills. So 10-year, 5-year, and 2-year are also moving in concert. There's no SMT divergence yet. Everything's creating higher highs. So indices also, of course, NASDAQ creating higher highs, S&P creating higher highs. So everything's moving in the same direction. This market is a go. Shorts are probably going to get toasted for the most part. Everybody sees this as premium. Everyone sees this as, oh my gosh, we can't possibly go any higher. This is such a premium, right? Well, we can start to look for that when we get to the weekly sell side imbalance, buy side inefficiency. If we see some market movement down from there, then that's all it had to do. It had to go up to a premium PD array, book it, and then we'll see if it heads up the monthly bearish order block, and then we head downwards to retrace to go efficiently deliver some of this price action, maybe in January. We'll see. We'll see. Okay, so it's 10:12 p.m. I need to log off. We'll come back in the morning and figure out what comes next. I'm thinking that with the performance accounts now, hey, I might pick up some evals at 71%. What is that? Let me see. YouTube. Is that link of mine? So let's see what that would be. So 0.71 times the cost of one of these, which is 167 a month. Oh, whoops, 0.29, right? Times 167. That'd be about $50. Not bad. That's about the cost of that's a sale from Top Step as well. So lots of really good things to do here. Okay. So that is it. Oh shoot, we're at 900 subscribers. I gotta screenshot this. That's so cool. I just noticed that. That's neat. Thank you for whomever subscribed. Appreciate it. Let me see if I can grab my phone. I want to screenshot that on mobile as well. Woohoo! We made it. We did it, everybody. We made it to 900. Woohoo! That's so cool. Okay. Enough speaking out here. All right. So, let me close this, get out of the way. So yeah, we will maintain the stance that we're going to head up to this imbalance here on the weekly. It takes a little bit more time to do so. So we'll just continue chugging along until we get proven otherwise, right? It is kind of ridiculous though, because look at how many weeks. These are weekly candles where we've seen nothing but green. So where our ending price has been higher than the lower price. 1, 2, 3, 4, 5, 6, and then this is the end of the 7th. Can we make it 8 total? Well, we will see. We will see. Typically, when it aims for net new highs, you make a nice big blow off top, and that's where you start to see consolidation. That's when you start to see some consolidation. And then if you start to see us return down from there, that's when you start to see a return to sell side model. And that's where you'll start to refer to all the short-term lows down here that we've left open for a while. We did something similar here, and then we came down to a 50% mark. So there's a chance that if we have a recession, we'll start to actually build out the rest of this market maker sell model here. But that's much longer term. We don't have to worry about that right now. No need to worry about that right this moment. There's nothing we can do about that. You can see what happened back in COVID lows. This was one of the craziest times to think that NASDAQ was down to 77.26. I was not trading futures at this time. I had never known about anything related to futures at this time. And my goodness, had I known what I know now, I would have been happy to see this continue. It was scary at the time, but I would have been happy to see a dip like this. Similarly, on the monthly, we can kind of see that it was just a blip, very small blip. And then we headed higher, bullish order block, traded down to it on the monthly, headed higher, bullish order block, traded down into it, bullish order block, traded down into this again, and we saw a market structure shift, and then boom, headed lower. Market structure shift on the monthly chart too, and then we kind of like first consolidation, distribution, head lower, distribution, head lower, terminus. So these charts will tell us all we need to know on the higher time frame from a bias perspective. We will see if we get a quarterly shift after this third month of January comes into play. I imagine in January we'll see a top before January ends, and then we'll start to reverse. It could be a top here at the monthly bearish order block, this whole zone that we're in right now, or it could be a blow off top and new highs for forever. So yeah, lots of high macro view items here. I hope this was helpful in pointing out the fact that we are still looking to higher prices overall, especially since today they kept rates the same. They did not hike rates anymore, and that is really important. That means that our yields and our treasury notes can have room to head higher. If you're raising rates, you're taking liquidity out by removing the amount of money that companies can borrow because they just the rates are too high, right? So when you're raising rates, generally treasury yields are going down. If yields are down, I mean, well, actually, no, sorry. When you're raising interest rates, the yield on treasury notes becomes less and less. So there's a little bit of an inverse correlation there. So far, it's been dropping since October. And with this in mind, we will see no rate cuts this December, and we'll have to see what happens at the next Fed meeting. Okay, let's see. That is it, folks. Yeah, I think that's it for today. We're gonna close the shop. Again, thank you to whoever subscribed. I can't believe we're at 900 people now. I'm kind of lost for words. That's really, really cool. I hope I continue to provide some great value for you. Insert name here, and Kirk, always good to see you here at Pre-Market Prep. I don't know if anyone else is here, but I hope this was helpful. We'll wait out the Asia range to see if we can see movement higher. If we see movement higher, we'll want to see if these relative equal lows at the end of the day can be taken out first, and then head to the sky. We have one thing to note is that we do have this range now to worry about, and it's gonna only probably go higher potentially, which would make me look towards this fair value gap here. But let's see what price does tomorrow. Okay, with that, I am going to close up the shop for today. Great trading today, and we will catch up some more tomorrow morning in pre-market prep and try to see if we can find something in the daytime. Yeah. Okay. Have a great evening, everyone, and get some rest. Stay hydrated, and we'll catch up tomorrow. Peace.